Our session starts now. Right. Many of us, we've heard what Forex trading is, and I understand some of us we have a basic understanding of what Forex trading is. So what I would want you to do is I would want you to forget, if you're someone who's known what Forex trading is, I would want you to forget everything that you've been told about Forex and take this as a starting point to learn everything new that I'm going to teach you about Forex starting today. Right. So many people have a general question on what is Forex trading. Right. So basically, Forex trading or Forex is the global market where people buy and sell currencies or synthetics to make money from price changes. Right. I'll repeat that again. Forex is the global market where people buy and sell currencies to make money from price changes. And the good thing is, these days we do it digitally. Back then, people used to have what you call trading floors before the introduction of computers, where people would go and trade physically, but now we do it digitally. So doing this digitally ensures us that we trade or we exchange or buy and sell currencies from whatever price changes that are happening globally. So basically, we are trading money for money. But it's not only money that we trade. We have what we call commodities, right? We have what we call stocks, right? So someone might ask, is it only money that we trade? We have what we call synthetics. And in this course, we're going to be focusing mainly on synthetics, right? Although I'll give you an overview of currencies as well. That's where most of our focus is going to be on. So someone might have a general question. I've heard that there's a thing called currencies. How different are they from synthetics? The only difference is fundamentals. Currencies have what you call fundamentals, and synthetics have what you call, they don't have fundamentals, they have technicals. I understand most of us in this session, we are using the broker derive. Right. Under derive, we find assets such as boom, such as crash, such as volatilities, which can come in form of V75, which can come in form of V100, right? So how does this whole Forex trading work? In order for you to make money in Forex, you have to deposit money in your account, meaning that we have what we call a broker, right? And then a broker, what a broker acts as is it acts as a middleman between you and the financial markets. After the broker, there comes what you call the Forex market, right? I want you to read on this loop so that you understand it. Because some people, they don't even know if they're depositing money, what they're basically doing. But let me answer that for you. Right. So we have a broker. After we broker, we have what you call the Forex market. And it. Right. Now, before the broker comes in, there's a reason why I didn't put you first. Before the broker comes in, there is you. Right. There is you, and you are the trader. So let me do this. Right. And you are the trader. You are the trader. Right. So you cannot, as a trader, go directly to the Forex market and ignore the fact that there is a broker. What you need is a broker first. And that broker is the one that you're going to use to initiate trades within the Forex market. Right. The broker, it gives you things such as spread. They control your margins as well. They give you access to what we call MT5. So let me put this loop. So you need what we call MT5, right? So I'll type it down so that others would understand it. Right, on MT5, this is now the platform that you execute your trades from, meaning that each and every trader is supposed to have an account. After you have an account, you're supposed to open an account with a broker. After you open your account with a broker, you're supposed to have an MT5 account. Right. So you are the trader, you load money in your broker, you load money in Deriv, and then you cannot execute trades directly from the broker, but you need a platform such as MT5. Although now we have things such as option trading, where Deriv is now providing its own platform for traders to execute trades in. You'd find out that most of the commodities or most of the action that we need to execute, we execute it on MT5. Right. When you execute your trade on MT5, it then directly registers again on the Forex market. On MT5 now, what do you do? On MT5, this is where you buy, this is where you sell. This is where you witness your profits, this is where you witness your losses. Basically, this is where you control your trades. It acts as an interface. Right. So I'll remove everything again from this loop. And then we move on to the second stage, which is how do we make money from the Forex market? Right. So, like I said, in MT5, we have what you call buying, and then we have what you call selling. MT5 comes in two ways, and I'll show you one of the ways, which is on our computers. This MT5 can be accessed on your PC as same as on your phone. So you need to have your phone or your PC in hand. So I'll share my screen of how MT5 looks like on your PC, and I'll explain some of the things that you are going to see from that PC so that you get a basic understanding of how things look like. So I shall now be sharing my MT5 screen. Okay, sorry, let me share this screen over here. I'm supposed to be sharing my MT5, is it? Right, so this is how our MT5 looks like on our PC. Don't mind me, this is a demo account. Remember, when you're just starting, you need a demo account. When you're practicing your trades, you also need a demo account. So let me do this for us so that we understand what really goes on. Now, let me put this profit table here. So this being our demo account, you can see that this is a demo, right? And it's giving us a balance of 400,000. This is demo balance, it's not real money. And if I press sell, what you're going to see is there is a trade that just registered here and it started in loss. What it generally means is every trade that we witness or every trade that we open, it starts in loss. Even if I press buy, what you're going to see is that same buy, it started in loss as well, right? So if we are expecting our market to move up or to go up, we are saying that we are in a bullish market. And if we are expecting our market to sell or to go down, we say that we are in a bearish market. Bullish means we are buying and bearish means we are selling, right? And it's not everywhere where you come and you press buy. We have to understand that we have things that we call a lot size. A lot size, what it generally does is it controls how much you risk per trade. So let's say here I've put 1 as my lot size and I press sell. You see that I started in a loss of 0.46 cents, right? But if I put a lot size of 10 and I press sell, you can see that I started in a loss of $4. So a lot size basically is what is going to control your risk or how you the equity that you're going to risk per trade. If you put a bigger lot size, it means you're going to get bigger profits, but as well, you're also going to witness bigger losses if that trade doesn't go your way. If you put a smaller lot size, it means you're going to witness smaller profits or you're going to witness smaller losses if that trade doesn't go your way. Right. When we trade price and we have what you call candlesticks. We have what you call a line chart. We have what you call a bar chart. Right. So what do I mean by this? If we come to our MT5 and I change my chart type, what you're going to see is it's going to give me these bars. Right. But if I change to candlesticks, it's going to give me my price is candlesticks. If I change my chart to a line graph, it's going to show my chart as a line graph, or it's going to show price in form of a line graph. So the most common that we use are candlesticks. And we use candlesticks because they are easy to read. Very easy to read. And especially for beginners like us, at the end of the day, what you see is we will quickly understand the concepts more if we use candlesticks rather than if you use the line chart or the bar chart. After candlesticks, the second preference is the line chart. And as the course goes on, I'll show you how to incorporate the two and how to use them. Right. Before I move any further, is there anyone else who feels like they have a question? Is there anyone who feels like they have a question? All right, we have Sean. You can ask.
Same, Kadi.
Good. Can you use English?
Okay. I have a question, say, on lot sizes. How do we calculate on which loss is going to start with, or I don't know, how do we calculate if, let's say, I have $10 and I want to buy
All right. So
uh,
okay. All right. So
which loss size I have to use.
okay. So I get
Can teach us how to calculate that?
All right. Since we're just starting, I'll get to that. There is a chart that I'm going to share, which is lot sizes that I'll share with everyone. I was to get there, so don't worry about that one. I'll definitely show you which lot sizes to use. I have a list of pairs that I have
Okay.
for the instruments that we have, and then I'll show you. So
Okay.
coming off from the MT5 interface, let's go back to our first interface that we had. So when we are trading Forex, I need you to understand something. Forex is not just traded in a way that you think is traded by special people. Some people would ask, who trades Forex? Forex is traded by banks, it's traded by institutions, and it's traded by retail traders. And we are the retail traders, right? So when we are trading Forex, we are basically fighting against people that have bigger equities than us. And the good thing is, during whatever that I'm going to teach you, I'm going to teach you on how to trade like those people. I'm going to teach you on how to follow footsteps, on how to trade like banks, as well as how to trade like institutions. Remember, we're just starting, and don't worry, we still have a lot more to learn. I know some people may start asking themselves a lot of questions. Right. So, like I said, with instruments, if we come here and we want to check on our derivative with instruments like volatility 10, let me show you in this way. With instruments like volatility 10, volatility 15S, volatility 25S. Now, the difference between these pairs is how volatile they are. In Forex, not everything moves the same. You find out that volatility 25S or a pair called volatility 25S, it will make you more money than a pair called V10. Why? Because of how volatile they are. To explain how volatile they are, I'll then come back again to our MT5. And let's remove this. And I'll show you this example over here. Right. So let's say we've taken volatility 25S and we say we open with the lot, one lot. I want you to see something. Let me press sell. Sorry, I want to open volatility 25. Let's say I open with one lot. You see that it started with a loss of $48. Now it's on $40 profit, $35 profit, $25 profit, $10, $41 loss, $50 loss. You see how fast moving it is. Now it's on $100 profit. But if I take a pair, let's say volatility 10, and then I put it, and then I open that same lot size. Okay, let's let it load. And I open that same lot size. I want you to look at something. If I press sell, we've started with a loss of minus 0.20 cents. Now we're still on a loss of minus 0.06 cents. So this is the best way we can explain how pairs are different when it comes to volatility. So some pairs, they will make you more money, but at the same time, they will make you more losses. Some pairs, they will make you less money, but at the same time, they will make you less losses. I hope we are understanding whatever that I'm saying right now. All right, so let's go back to our screen and let's get on to the next point that people might want to ask themselves, right? So we have what we call time frames. Okay, and this requires me to go back again to MT5 so that I can give a clear explanation of this. We have what we call time frames. For example, I'll go to my candlestick chart. What you'd see is we have what you call an M1 time frame. After that, we have an M5 time frame. We have an M15 time frame. We have an M30 time frame. We have an H1 time frame. Remember when I said we're going to be using candlesticks because we can easily understand candlesticks more than the line chart or the bar chart. Well, this is one of the examples or one of the main reasons why we use candlesticks. Right. So let's say we are on H4 is our time frame. I think we can all see here we are on H4. If we are on H4 and we decide to mark this candlestick, right? All right, before I proceed, I forgot to tell you something. We have two types of candlesticks. We have a candlestick that buys and we have a candlestick that sells. Right. So let me just do this. I think here is the right platform where you can see that. We have a candlestick that buys and we have a candlestick that sells. A candlestick that buys is usually green in color and a candlestick that sells is usually red in color. So a green candlestick, let's say this is our green candlestick. Since we now know that it buys, I want to show you something. Okay, just a second. I want to show this. Right, good. Since we know that a green candlestick buys, the way that it opens is it opens from the bottom and then it closes at the top. And then a candlestick that sells, what it generally does is, since it's red in color, it opens from the top and it closes at the bottom. So I would always want you to remember this. A candlestick that buys, when it always opens from the bottom and it closes at the top. A candlestick that sells, it always opens from the top and it closes at the bottom. Now, we have what you call wicks or tails. I think we can also see tails over here on my left side, these ones here. For a tail to occur on a candlestick, we usually term this as a rejection or a failure to push, right? So let's say this green candlestick over here that we see, at some point, it cannot open, it can open as a green candlestick, but before it closes, what it can do is it can go down and sell. That means it can change color, right? But then as it changes color, remember what I said. A green candlestick means we are buying. Basically, it means we have more buyers than sellers for that candlestick to open. So buyers can open a candlestick and then sellers can step in the market. But then buyers will overpower again those sellers. What they will do is they will leave what you call a wick or a tail. Right. Just as much as here, this red candlestick can open red, but then at some point it can turn green. But because we have more sellers in the market, what you see is when it closes down, I want you to see this. When it closes down, what it leaves behind is a tail, and then it continues to come and close down. So these tails or wicks, we call them rejections. Right. So as we have different time frames, this candlestick can open in an H4 time frame. Let's say this is our 4 hour. What it means is if we go to 1 hour, all right, for example, let me show you this. I think if we do it on the actual chart, that's where you can actually understand it. Right. This is a daily time frame. I think we can all see here it's writing 24-hour. This means it took 24 hours for one candlestick to open and close. This candlestick took 24 hours, this one took 24 hours, this one took 24 hours. Meaning that this one here, it also took 24 hours, right? And this one here, it hasn't closed yet. Why? Because it hasn't surpassed its 24 hours. So what we do is, for us to understand this concept that I'm talking about here, let's mark this candlestick here. All right, let me do this. I want to fill it. Right. What we can do is, let's mark this candlestick that we see here. I think we can all see that I've marked it. This red candlestick. This is where it opened here. Since it's red, it opened here and it closed here. Meaning in this whole range here that I've marked, we are supposed to see how many 4-hour candlesticks. You can answer that yourself. How many 4-hour candlesticks make up a 24-hour chart? Makes up a 24-hour candle. We are supposed to see 4-hour candlesticks, 6 4-hour candlesticks. So let's go to our 4-hour time frame. So if we go to our 4-hour, what we are going to see is we have 6. We must be having 6 of those 4-hour candlesticks that made up our 24-hour candle. And our 24-hour candle, it started here. Okay, let me try to mark the precise candlestick point. It started here and it ended where? It ended here. So if you count them, these are how many? 1, 2, 3, 4, 5, 6. And if we go to our 2-hour time frame, how many 2-hour time frame candles should make up this whole range? There should be 12, right? So let's go to 2-hour and see how many candlesticks we have in 2 hours that made up that candle. As you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. But if we come back to the daily chart or the 24-hour chart, it's gonna be just one candle that we see. So why am I teaching you about time frames, and why do we need to know about time frames? We don't take trades from a very bigger time frame like the 24-hour. We take trades from smaller time frames, and these smaller time frames are like the M15, the M30, the M5. We only use bigger time frames to do what you call analysis or to analyze our trades. That's where we do analysis, and then we go into smaller time frames and then we take trades from those smaller time frames. Is there anyone else? Is there anyone with a question currently? Anyone who feels like they need to ask something? All right, Samuel Ryan, you can ask. Please, let's use English only.
Um, I'm noticing maybe our time might be reaching its limit. You said you're gonna guide us with the account size and lot sizes.
Yeah, I'll send it. I'll send it in the group. It's a very
Oh,
big. Yeah, it's a very big document with every pair.
oh, okay. That's all I just wanted to remind you.
All right. What about others? Do you have questions? All right. So since we don't have any questions, this is what I'm going to do. I'm going to send some notes in the group, some PDFs with the lot sizes, and everything that can make us get started. I'm also going to be sharing which applications we need to download. If we are replaying this on YouTube, I'm also going to take the applications that we need: MT5, TradingView, and then for our MyFX book. So if we don't have any questions for the first session, please let's go. Okay, we have another question. Passion, you can ask. I've unmuted you. All right, Passion, I've asked for you to unmute. How are you?
I'm good, thanks. How are you?
I'm good.
So my question is it advisable to say you open your trade, say on a lower time frame, maybe 1 minute or 5 minutes, right? Is that advisable to mark your TP from a much bigger time frame, probably a 4 hour or even a day?
Yes, it's very advisable. Actually, we are doing that session tomorrow on where to put your TPs, what TP is, how to really calculate your TP points, and all that. It's a good question you asked. It's very advisable from lower time frames to bigger time frames. That's very much okay.
That's all right. Thank you. I'll look forward to tomorrow then.
Okay. What about other guys? Or do you want me to pick? I can pick anyone to ask a question if you are saying you've understood. Okay, I'll pick Olua Vicky. Olua Vicky and Adebis. I've asked you to unmute. See, this is where Forex starts. So if we're not together on the same page, guys, you understand that by the time we reach a certain stage, you will be behind.